Yo, what's up, people? Happy Sunday. This is T from Simpler Trading. Let's do some Sunday prep. So, for those of you in the options room, and those of you not in the options room, take a look here. So here's the trades that we closed this month. Remember, when I'm taking these trades in the options room, I'm alerting the entries and exits in real time. And, obviously during my sessions in the options room, we're talking about the why and how as to, the thought process behind the trades. So, you can see a couple of these trades were opened, we opened one in February, a couple of these we carried over from March, and then a handful here from April. So, at the end of April here, end of the month, pretty good performance. So a total of 13 trades that we closed this month. 11 of them were winners. One of them was a losing trade, which was APPS. I counted 2 losers because one of them was a break-even iron condor on the SPY. So, if you want to count break-even as a win, suppose you can. But 13 total trades. I'm counting 11 winners, 2 losers. It's a win rate of 85%. And on the position sizes that I personally took for the options room trades, $26,000 of profit. And on my end, with these trades and a few others that I took on my own, about a $36,000 month. But who cares? What y'all were here for is the prep. So, here's what I'm thinking. If we look at the daily charts, right, I guess we can start here with the Qs. But looking at the daily chart, going back here, early April, you got a beautiful daily squeeze setting up, not just for the Qs, but Amazon, Google, Apple, Microsoft, Nvidia, as well as the S&P 500. Beautiful daily squeeze. The squeeze fires long. We get a couple of weeks of momentum. We get that big 2 to 3 plus ATR push. And that's where you want to get aggressive. So different kind of cycles we go through as a swing trader. When the indexes are setting up in a squeeze, that's that moment in time where you really want to focus on building your focus list, finding those high probability setups. Because once you find that setup, all you need behind you is the wind of the market, the wind at your back. So when the market is setting up in a squeeze, you build your focus list, get a couple of good high probability setups, and then once the squeeze fires, you're looking to take advantage of those setups. But moving forward here, a couple of things to take note of. One is just the momentum. So on the squeeze indicator, the light blue bars are a sign that we're releasing momentum to the upside, and the dark blue bars, that's your potential heads up you're losing a little bit of steam. So it doesn't mean the market is going to roll over. More so what it means is the easy part of the move is done. So that most recent squeeze is done and over with. All we did this week was hang near the 8 EMA, and in that chop fest, we do have a brand new daily squeeze. So if we're going to look, a week, 2 weeks, 3 weeks down the road, you still got the weekly squeeze here for the Qs. You get the brand new daily squeeze coming in. I do think the next directional move could come from this daily squeeze firing. And with the recent strength in the market and the weekly squeeze, I would, lean towards assuming that squeeze fires to the upside, but we shall see. But for Amazon's, Google's, Microsoft's, Tesla's, etc., the next nice move in those individual stocks is probably going to be when the market makes its next directional move. And since we got a squeeze, we can use that as a pretty easy gauge. So that could be the next move once that squeeze heats up a little bit. But in the interim, we could see the market do what it typically does in a squeeze, which is a whole bunch of back and forth chop. So I think potentially here, if we throw the Keltner channels up, when you're building up energy inside the squeeze and the squeeze fires, that's when you can make that 2 to 3 plus ATR move. But once you lose momentum and a new squeeze comes in, anything could happen next week. So you don't want to bet against this really resilient market. At the same time, though, with the loss of momentum, new squeeze, we could spend maybe a week or so just kind of chopping back and forth, letting those Bollinger Bands tighten, building up energy. But in the midst of the back and forth here, a nice trade for that choppiness is going to be the iron condor. So again, market could roll over next week. Market could make a huge move to the upside. But I'm trying to kind of put probabilities in my favor here. So signs of exhaustion, a little bit of sloppiness on Friday. So if we are going to spend the next 5 to 10 days, call it, chopping back and forth, the iron condor could be the ideal trade. So I did put on one of those on Friday in the training room. So for all my options room peeps, my bad for not getting this posted. Maybe we'll have a chance here Monday morning to get something similar. But Friday expiration, May 7th, NDX Iron Condor. Going with NDX where the big premiums are. Heading into next week, they got about a $290 expected move. So we went a little bit further out the money than that expected move on the put side. So the strikes at 13,500. Went 20 bucks wide, and then on the call side here, scrolling. On the call side, short strikes at 14,200, And there we went 20 bucks wide as well and bought the 14,220s. So in plain English, as we roll into Wednesday, Thursday, Friday of this week, if the market is in this range, anywhere above 13,500, anywhere under 14,200, we're going to collect some nice premium as those out the money calls and puts will quickly begin to disintegrate. So as the market is going through that potential buildup of energy phase, the iron condor is a great trade. Once the squeeze gets tighter, once you have a positive histogram, and once lower time frame squeezes start to set up on top of those buy zones, the 21 EMA or the 8 EMA, then you're getting a pitch there for the next directional move. In the meantime, focus on building your watch list, good high probability structures, and if you can suck a little premium out of the market at the same time, why not? So as far as things I'm going to be focusing on here, a lot of the setups that I do like, they got earnings in a few days. So, my ability to trade these really depends on whether or not the squeezes are still intact after earnings. So I love Expedia. I think you got a beautiful trend here. Really good structure to the daily squeeze. Tight compression, as we can see from the orange dots on the Squeeze Pro. And you got a couple high compression squeezes under the surface. So this does strike me as that high probability moment in time where Expedia here is getting ready to get something going. But we got to wait until earnings. So I'm going to keep that one on the focus list. Caterpillar isn't equally as good of an uptrend. You also have a high compression squeeze. Before I take an entry here, I would like a couple closes back above the 21. So I'm going to keep an eye on Expedia and NVIDIA here. NVIDIA could be interesting. So bigger picture perspective here is you got a bullish weekly squeeze that hasn't fired to the upside yet. With 3 or 4 weeks left to earnings, maybe we can get something going to the upside here. So like the rest of the market, here was the easy move on NVIDIA. We had the daily squeeze in the indexes. NVIDIA does the same thing, makes the same move. But like the market, you got signs of exhaustion. You've pulled back to the buy zone. And now on top of the buy zone, you had a couple lower time frame squeezes setting up, which aren't the prettiest right now. So you do have a 4-hour squeeze. But it looks like it could fire to the downside, or already is. No stacked EMAs. So that's not the cleanest looking one yet. You got a 2-hour squeeze firing short. So I think you got to wait for signs of exhaustion on that 4-hour, on that 2-hour for NVIDIA. But you are back to the 21. So maybe like the overall market, it spends a couple of days kind of chopping back and forth here. But at any point, if you get a 4-hour squeeze, a 2-hour squeeze, or a 1-hour squeeze with a bullish structure on top of one of the buy zones, the 8 or the 21, use the bullish structure of that lower time frame squeeze to potentially start working an entry for a bigger move. A good example of this is Google. You go back to Google here, good looking daily squeeze, but if you dial it down a little bit, take a quick peek here, my good people, under the surface, right on top of that buy zone at the daily 21, you had a 4-hour squeeze. Inside of that 4-hour squeeze, hold on, you had a 2-hour squeeze inside of the 2-hour. Hold on, where is it? Inside of the 2-hour, you had a 1-hour, and hold on to your pants here. Inside of the 1-hour, you had a 30-minute. So if every time frame is just, in that high probability moment in time where Bollinger Bands are contracting, you're building up energy, histograms turning positive, it's that domino effect. Where the 30-minute squeeze can fire long, that triggers the 1-hour squeeze. The 1-hour fires long, that triggers the 2-hour. 2-hour triggers long. 2-hour fires long, that triggers the 4-hour. All those lower time frames releasing energy under the surface, it has that domino effect. It can certainly lead to the daily squeeze triggering. So with NVIDIA, be looking for something like that. But really here, going to take the foot off the gas pedal just a little bit and kind of let the market play itself out. So I think as swing traders, once the market is going through that buildup of energy phase, put together a good focus list. Find those kinds of setups like NVIDIA, Expedia, Caterpillar, but then practice patience and wait for the market to get something going. And usually we're going to get something going with those lower time frame squeezes. So if you look at the market right here, we're going through the buildup of energy phase. Maybe it doesn't last long. Maybe it lasts for another 2 or so weeks. But build your focus list. If you can do things like iron condors and bring in a little bit of weekly premium, that's cool too. But most important goal moving forward, I hope for all of us, protect the easy money. We're going to make the easy money when the market is in a squeeze, and we're making the easy money once the squeeze fires. And you get the 2 to 3 ATR push. I say this respectfully. I say this with love. Anybody can make money when the market is doing that. what's going to separate the good traders from the not so good traders over the next week or so is who can protect those easy gains. So I'm not impressed with myself by any means if I can make, look at the Amazon trade, $25,000 of profit on that most recent trade. Yeah, position sizing and account size has a big role in that, but it's also the fact that the market was just pumping here. Anybody can make money on that move. Who can keep the money when the market goes sideways and get ready for the next directional move? So that's what I got for you. Got the NDX Iron Condor. We do got a little bit of a position here on NVIDIA, about a 2.5% position. So looking to build up a little bit more, see if we can't get something going into earnings. We do have a put credit spread on the Qs, so I think we're pretty balanced here. But I hope you enjoyed the video. We crossed 6,500 subscribers this morning, so awesome shit. Really appreciate you. But hope you have a good weekend. Spend some time with family. Relax just a little bit because tomorrow morning, back to work. So hope you get a little bit better this week, and I'll talk to you soon. Peace out.